T, good to see how you doing. How you been, T? Good evening, Professor Miles. Funky, good to see you as well. How you doing? Free and Forever, good to see you as well. How you doing? How you been? Christina, hi Miles. How you doing, Christina? Welcome to the CMF Live. Hi Miles, how's your day? Autistic was good. Good to see you as well. How you doing? Evening, Miles. Good to see you as well. Susie, how you doing? Okay. Just trying to pin it, and I think I pinned it. Yeah, there we go. Live show is pinned now. Okay, let's do intro, disclaimer, and what we're going to talk about on tonight's live because the markets have done a reversal. So we went through a choppy market space, you could say, for about 72 hours, and then the markets restored themselves, which is brilliant. If anybody was able to catch some lower lows on the market space for any crypto projects you wanted to go for, I'm happy that you made these purchases. If you didn't have enough money, that's perfectly fine. As I said yesterday, as long as you hold in times like this, you're still up more than the people that would be selling. And again, none of that's financial advice whatsoever. And on the topic of financial advice, not financial advice, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards. The most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 436 of the CMF Live show you're watching right now. Thank you so much to everybody who has liked and retweeted this live show straight away, essentially by joining the live show. If you're watching this on X, honestly, thank you so much to everybody who has done that. If you're watching this on YouTube, thank you so much to everybody who's also liked the live show as well. And a special thank you to everybody who essentially puts a comment outside the live as well. If you haven't on that CMF members, drop a like and drop a retweet. I do appreciate it when everybody likes and retweets and engages essentially, not just inside the chat, but also outside the chat, outside the live as well. Let's go to the comment section before we talk about what we're going to go for. Actually, you know what? Let me give you a hint of what we're going to talk about on tonight's live. We're going to talk about essentially the market's bounce back that everybody's watching right now. We're also going to go through some prospective news. We're going to go through some tech stock news because that's all relative to the crypto space. We're going to talk about China on tonight's live show as well. We're going to talk about essentially Bitfarm, which is one of the biggest essentially Bitcoin mining farms out there, on essentially what their next moves are. There's a lot of things happening regarding Bitcoin corporations, mining corporations, going towards AI data centers, even in times like this. We're going to talk about the Iran situation because apparently that's once again weighing in into the crypto space as well. We're going to talk about some positiveness that's happening inside the crypto space moving forward. Obviously, we're going to talk about some Ripple news as well on tonight's live show. We're going to talk about XRP, obviously, on tonight's live show as well. Before we talk about any of those things, and the first one we're going to talk about is the market bounce back. Let's go inside the comment section first, and then we go straight into the first news. So let's see where we're at inside the comment section. We were here, I think. Yeah. Manny, good evening, Miles and CMF. Manny, good to see you. How you doing? Evening, Miles. Jeff, good to see you. How you doing? Evening. Hello, Miles and CMF family. How you doing, boss? Doing great, Carlos. Good to see you. How you doing? I topped up my XLM bag yesterday. Should have got more of others as well. Yeah, the market did do a dramatic bounce back. I mean, yesterday we were talking about, the CoinDesk essentially article that came out on the verge of, the markets are reaching their bottoms and a violent uprise is on the way. We're starting to see essentially a glimpse of that violent uprise so far. But, as I said, good on the people that topped up. And if you didn't have enough money, that's perfectly fine. Holding will still do you you're still on the winning side, is what I want to say. Good evening, Miles and CMF. Bullock Soppy, good to see you. How you doing? Good evening, Miles and family. Let's go. Ian, good to see you. How you doing? Morning, Miles and CMF. Shelly, good to see you. Morning. How you doing, Shelly? How you been? Like the live and retweet, please. Let's go, funky. XRP 25% up, 24% up. Let's go. Up and away. Let's go, funky. Hi, Miles and CMF. Keith, good to see you. How you doing? So let's go for the first news. Everyone should be tuned in for that part. Bitcoin reclaims $70,000 essentially level as market bounce back from historical sell-offs. So Bitcoin essentially staged a significant recovery today, surging back above $70,000 mark after one of the most violent, essentially, trading sessions in years. The cryptocurrency rose more than 11%, essentially from its Thursday lows, providing a relief to investors following essentially a flash crash that had set essentially prices tumbling towards $62,000. The rebound essentially suggests that the market may have found a temporary fall as buyers essentially stepped in to capitalize on what the technical indicators, such as the essentially RSI, had signaled essentially were the most oversold conditions since 2020 COVID-19 crashes. The recovery came aimed essentially at a complex backdrop of institutional maneuvering and high stakes essentially market drama. While major mining farms, essentially like Marathon Digital, was seen moving large quantities of Bitcoin, totaling essentially $87 million into credit, and trading firms, the derivatives markets began to signal cautious optimism, and analysts also noted that the violent, essentially upside predicted by the indicators essentially was partially fueled by a short squeeze as bearish traders who had bet on further declines were forced to essentially close their positions as the price rapidly regained ground. Despite the bounce essentially back, market participants remained wary of the ongoing essentially pressures, particularly after the reports of a massive error at the Bitthumb essentially exchange, which mistakenly distributed Bitcoin to users and caused localized prices to deteriorate. However, the broader sentiment is shifting right now towards stabilization, with Bitcoin now trading back above psychological resistance levels. And essentially, the focus has moved to whether this recovery can be sustained or as if it's merely a relief rally within a broader, essentially, period of market downtrend. Sorry about the noise. Right now, the markets have bounced back, yes, 100%. And it's great news. We had 72 hours of absolute market dumping situations. Now, essentially, we're starting to see, regarding the indicators, the RSI, essentially, and the perspective from many analysts, essentially, around the world, indicating that we should be seeing some sort of a violent uprise straight away, which we saw, if I had to say, a glimpse of that, essentially, that violent uprise today. Out of all the crypto projects, XRP is absolutely smashing it. But we're going to talk about that a little bit later on tonight's live show. But so far, good news on the market side. Now, Galaxy Digital is what we're going to talk about next because tech stocks play a big role when it comes to cryptocurrencies, when it comes to Bitcoin, especially. If tech stocks essentially do bad, Bitcoin tends to do bad. And I know Bitcoin is known as the digital gold. It's supposed to follow gold or react like gold. Unfortunately, it follows tech stocks more than it does when it comes to gold. Now, Galaxy Digital shares essentially saw following $200 million essentially stock buyback authorization as well. Shares of Galaxy Digital essentially surged nearly 18% essentially today as well after the company announced its board had approved a substantial share of essentially repurchasing programs. The plan authorizes digital asset financial services firm to buy back up to 200 million essentially of its Class A essentially common stock over the next 12 months. Galaxy Digital does play also a massive role inside the crypto space. They have a crypto portfolio filled with Bitcoin, Ethereum, Solana, and XRP. This aggressive, essentially capital return move provided a significant tailwind for the stock, which had essentially been trading at a steep discount following essentially a broader market downturn in crypto-related equities. In a statement, Galaxy Digital's CEO Mike Novoscott expressed a strong confidence in the company's long-term trajectory, noting that the firm is entering 2026 from a position of strength. He emphasized that the buyback program is a strict tool to return value to shareholders at a time when management believes the market price does not accurately reflect the underlying value of the business. The move essentially is also viewed as a signal of balance sheet resilience, coming just days after the company reported its fourth quarter and a full year, essentially 2025 financial results. Market analysts also noted that the buyback authorization helped flip a sentiment essentially for Galaxy, which had recently been under pressure alongside Bitcoin's price volatility, by reducing the available share supply and signaling a institutional grade financial health. The program has bolstered investors' appetite for the stock. While the firm is not obligated to purchase the full $200 million essentially amount, the flexibility to execute the repurchases through essentially open markets or private transactions suggests that Galaxy is prepared to provide a floor for its valuation during periods of market uncertainty. The crypto space is doing pretty damn well for itself. The tech stocks are doing pretty damn well for itself. The entire market space picked up like a domino effect or like a ripple effect, to be fairly honest. Now, putting aside just for a second the good news inside the market space, there is essentially news that you should also know about, essentially what's happening around the world that can weigh in inside the crypto market space. One of them being China. So, here is what's happening right now in China when it comes to the crypto space. China tightens the grip with renowned ban essentially on stablecoins and asset tokenization. So, while the United States, the UK, the EU, Canada, Australia, Japan, Singapore, China decides to essentially ban tokenization, go further into banning tokenization, go further into banning stablecoins. Chinese regulators have significantly intensified their long-standing essentially campaign against digital assets, especially targeting stablecoins and the tokenization of real-world assets. In a joint notice issued by 8 government departments today, including the People's Bank of China and the China Securities Regulatory Commission officials clarified that stablecoins like USDT do not hold legal tender status and that all business activities linked to them are considered illegal financial ventures. Now, that's an interesting point when it comes to USDT. This latest move underscores Beijing's unwavering commitment to protecting its monetary sovereignty and maintaining strict capital controls by eliminating any digital instruments that could bypass their traditional banking systems. China is not very fond of the idea of essentially cryptocurrencies or Bitcoin mining or so on and so on. However, it's interesting that, according to one Bitcoin mining firm that sells these essentially Bitcoin mining equipments, that China is still one of their biggest buyers, even though it's banned when it comes to Bitcoin mining in China. Second point to make is that USDT being banned in China is an interesting one. I mean, we all saw the idea of USDT being banned in the EU because they can't comply when it comes to the MiCA regulations. And USDT essentially may be struggling on the US side as well because their headquarters are not based in the United States. USDT is essentially getting banned in Canada, and the list just goes on. China's an interesting one that's essentially banning USDT now. The expanded crackdown especially addresses the rise of private stablecoins pegged to essentially the US dollars, prohibiting both domestic and overseas entities from issuing such assets without a prior approval. Regulators expressed a deep concern over the risk essentially that these assets pose, including money laundering, fraud, and the potential for unauthorized cross-border capital flows that could threaten the directive, essentially, that could threaten the national financial security. Furthermore, the directive extends to the emerging sector of asset tokenization, bearing financial institutions from engaging or promoting essentially the issuance of trading of real world asset tokens, effectively closing what many investors had hoped would be regulated side door for digital assets. This policy essentially reinforced highlights a growing divergence between mainland China and Hong Kong, which has recently been building a more welcoming framework for regulated stablecoins and tokenization pilots. By involving essentially multiple high level agencies, Beijing has sent a clear message that it will not tolerate digital asset speculation that challenges the dominance of digital yuan. Moving forward, the government plans to intensify monitoring of capital essentially flows and launch public education campaigns to ensure compliance and signal a new era of strict coordinated enforcements designed to safeguard Chinese financial stability against the perceived risks of digital finance. What China is actually banning is any cryptocurrency or any stablecoin that is pegged to the US dollars. China wants the Chinese yuan, the digital Chinese yuan, to be the leading essentially currency in China. They don't want USDT or any other essentially American pegged stablecoin, US dollars, to be essentially in any sort of the rankings when it comes to Chinese users. However, Hong Kong on the other side, essentially spectrum, is offering essentially stablecoin licensings, is big on the idea of tokenization. Chinese businesses that do want to conduct anything when it comes to the crypto space, they do tend to do it through Hong Kong, to be fairly honest. But that's essentially what's happening in China. While the rest of the world is trying to figure out regulations when it comes to crypto space, China is still standing very firm against tokenization and against the idea of a US dollar pegged stablecoin. Now, and it all does essentially, to be fairly honest, stem from when Anton, who is Putin's advisor, one day came out and said in 2025 that they believe that the US is going to be using stablecoins to wipe out their national debt, which about 24 hours later, China made the announcement they're completely against stablecoins. The idea that America can stand strong threatens the Chinese authorities. Now, even in the digital world, the Chinese can't get away from the idea of America being number one. Moving on, essentially, from what China had to say, which, by the way, China's announcement today was very, very negative, but it had zero impact on the crypto market space, which is what we love to see, to be fairly honest. That the crypto market space was still shooting up today, even when that Chinese news announcement came out. So that was quite resilient, I would have to say, for the crypto market space. Now, also, something that you should know, there's quite a lot of essentially Bitcoin mining firms turning into AI data centers. Now, we talked about this in 2025 regarding Bitcoin mining firms realizing that they can make more profits by essentially going into the idea of creating AI data centers than mining Bitcoin, which is exactly what's happening again. One of the biggest essentially firms out there, Bitcoin mining firms out there, Bitfarms, has rebranded itself. They went as far as rebranding themselves as Q Infrastructure in a shift towards AI and US markets. Now, we've had Bitcoin mining corporations just, the warehouses that they have, the equipments that they have, they just on the side start doing AI data centers because they can make more money from AI data centers than mining Bitcoin. But as far as Bitfarm, they went so far that they had to rebrand themselves to become an AI data center and completely get away from the idea of Bitcoin mining. So here it is. Bitfarms has announced a transformative plan to completely from Canada to the United States and rebrand itself as Q Infrastructure, signaling a formal exit from its identity as a pure Bitcoin mining company. CEO Ben stated that the firm is officially entering a final phase of its pivot, focusing on high performance computing and artificial intelligence infrastructure. This strategic overhaul follows the company's assessment of market trends and a desire to capture the growing economic essentially opportunities within the AI sector, which essentially the leadership believes offers more stable and substantial long-term value than traditional Bitcoin mining. Now, I don't know, I understand why they decide to go towards AI data centers than essentially mining Bitcoin. Makes sense, to be fairly honest. You do earn a lot more money becoming an AI data center than mining Bitcoin. But rebranding themselves, I think maybe it had something to do with the Epstein situation. There's a lot of companies that, don't want to associate themselves with Bitcoin anymore due to those Epstein emails. And the timing is interesting. Bitfarms decides to rebrand themselves and completely walk away from the Bitcoin title and be named Q Infrastructure. The transition to a Delaware incorporated entity is intended to simplify the company's story for US investors and increase its eligibility for major index inclusions. As a part of its infrastructure essentially first approach, the company plans to repurpose its existing energy portfolio for AI data centers. With this Washington state facility expected to be the first fully converted site by late 2026, management anticipates that shifting from GPU as a service model could generate significantly higher net operating incomes than its previous mining options, providing essentially a more robust financial foundation for the future of growth of AI. Investor reactions to the announcement was overwhelmingly positive. The investors within essentially Bitfarm, now named Q Infrastructure, the investors were actually happy. The stock price for Q Infrastructure rose 18% when they made the announcement today they're moving away from Bitcoin mining. Following the news, essentially, by moving its principal executive office to New York City and adopting the Q monarchy, essentially intended to represent the structural backbone of AI revolution, the firm aims to distance itself from the volatility of Bitcoin. While the move carries execution risk, it underscores a broader trend of crypto Bitcoin miners leveraging their vast energy assets to meet the skyrocketing demand for computing power required by Silicon Valley's AI giants. I'll be very honest. I think I can see a lot more Bitcoin mining companies deciding to suddenly, go towards AI data centers. One, they can make a lot more money. Two, the costs don't add up when it comes to the amount of electricity they use to maintain those Bitcoin mining essentially equipment, the costs just don't add up, and the tax probably won't add up either. So it makes a lot more sense for them essentially to go towards AI data centers, but rebranding themselves to completely walk away from Bitcoin is an interesting play. But they're essentially backers there inside the stock market love the idea. The stock's up 18%. It's not good for Bitcoin's future in the long term, but maybe they're starting to come to the realization that utility is what matters going forward. Now, also, what we need to essentially keep into consideration, besides the China situation, still trying to ban cryptocurrencies with the announcement today, or Bitfarms decide to completely rebrand themselves and walk away from Bitcoin, to Iran and US, because that's also going to be playing a role inside the crypto space as well. So this is essentially what was released from CoinDesk today. US and Iran nuclear tensions resurface, adding pressure to the crypto market space. It's something that you should know in case anything happens in the Middle East and you're watching the crypto market space and suddenly it gets volatile again. It's because of maybe something that could happen in the Middle East. So this is why CoinDesk wanted to let everybody know. Geopolitical uncertainty has intensified as the United States and Iran entered a high stakes round of indirect nuclear negotiations in Oman today. While Iranian officials categorized the initial discussions as a good start, is what Iran said, the diplomatic progress was overshadowed by the stark warning from Donald Trump's administration. President Trump has signaled that bad things could happen if a comprehensive deal is not reached. A message backed by the significant US military buildup in the Persian Gulf. Right now, the US Army the US pretty much has its entire army, you could say, on the Persian Gulf. Now, Trump is an unpredictable man. We never know what his next move is going to be, but that's why essentially makes it good. On the topic of Trump trying to have discussions with Iran, I hope Trump is trying to stall some time before he makes a move. But if the idea is that Trump is going to make a deal with Iran after everything they did, I think it's a very coward move from Trump's side, genuinely. So I hope Trump doesn't come to any sort of deals with Iran. And because if he does, he's no better than Obama, who gave billions of taxpaying essentially money back to Iran. And he's no better than Obama, because if Trump cowards away from Iran, he's a laughing stock of the world. So I hope Trump isn't going to be cowarding away and he's just stalling to see essentially how he's going to be doing, the attack, essentially. Because if he cowards away and goes back, it's not going to go well for his aura of, he's the boss. The friction in essentially is centered with the scope of negotiations, with the US pushing for a comprehensive deal that addresses Iran's ballistic missile program and the regional influence. In contrast, Tehran has insisted on limiting discussions strictly to its nuclear program while demanding an end to threats and pressure. This diplomatic stalemate, essentially combined with the reports of US warships conducting drills with Israel, has fueled fears of essentially a potential military confrontation. For crypto markets, which essentially were already reeling from a flash crash and a multi-year lows essentially earlier this week, this geopolitical risk-off environment has acted as a persistent headwind, preventing essentially cleaner recoveries. Now, regarding the Iran and essentially Israel and US situation, the last time this situation spiked up and there was warnings happening and so on, the crypto market space actually rose in price. The crypto market space rose in price. Why? Because the Iranian government decided to move a huge amount of money onto the crypto market space. Monero reached all-time new highs. That was because of the Iranian government trying to wash their money as fast as they possibly could. So if this war does happen, is it going to be bad for the crypto space or good for the crypto space? In most likely case, it's going to be good for the crypto space, this war happening, because the Iranian government will once again try to wash more money through the crypto space. So we could see a spike in prices. If anybody's a trader out there, that could be an opportunity to long the market space. Now, why would it play negative inside the crypto space? Because it will be a shock for the crypto space that a massive war is about to be happening in the Middle East. That could also play out as well. But looking at what happened the first time around when Monero reached new heights, the crypto market space started skyrocketing. It was because they're washing money for the crypto space. So is that possibly going to happen again? It's higher chance that's going to be happening again. As the markets look ahead to the next round of talks, the narrative essentially remains binary. Either a diplomatic breakthrough will spark a relief rally, or a continued stalemate will invite further volatility. Analysts note essentially that Bitcoin has been increasingly sensitive to these microeconomic shifts, after essentially often moving in tandem with broader tech routes during times of international instability. With the US maintaining a model in the region and Iran threatening a harsh response to any strikes, the geopolitical premium is likely to remain embedded in asset prices, leaving the crypto market space in a state of cautious paralysis until a clearer path forward of essentially towards de-escalation emerges. As I said previously, I stand with the United States. I stand with Israel when it comes to the Iran situation. I'm Iranian myself, I'm Persian myself, and I hope Trump essentially doesn't do a deal with Iran, because that deal, that if they, the United States does end up doing some sort of a diplomatic deal with the Iranian vicious Islamic Republic of Iran regime, it wouldn't end well anyways. That deal will fall apart within a week. And again, the crypto market space, the stock market will get affected. Every week, the crypto market space, the stock market will get affected because of Iran, Israel, and US. The best option for the US is they have their entire army outside in the Persian Gulf. The US has pretty much their entire army in the Persian Gulf. Just attack Iran already, attack the Iranian government, get rid of them, and let's just get it over with and bring the Shah in. Honestly, just get it over with and bring the Shah in. I don't understand this stall that Trump is trying to do, or this diplomatic deal is trying to do with this regime. The deal would fall apart within a week. Every time Trump comes on the news and says, "Oh, we had some talks with Iran and so on and so on, and I told the Iranian government to not kill its people. I stopped 800 people from getting, you know, killed from the Iranian government." On the other side of the news in Iran, they were mocking Trump. They were saying Trump is a moron in Iran's news. They're saying Trump is a moron. Who's going to listen to him? The 800 people Trump said we saved, on Iranian news, they were saying we already killed them. I don't know what Trump is talking about. He saved 800 people. In Iran's news, they're mocking Trump, but on Trump's side, he's coming out and saying, "Oh, I've saved people." He hasn't done anything yet. So, Trump, honestly, just get it over with. You have the entire US military on the Persian Gulf. Just get it over with. Stop trying to make a deal with a government that mocks you, mocks Americans, and mocks everybody else that's against them. There's just no point of making a deal. Just get it over with so we can move on with our lives. Now, Wall Street is what we talk about next on tonight's live, but that's things that you should know. One, China is still spewing against the crypto space. Two, Bitcoin mining corporations are rebranding themselves and moving away from Bitcoin. And three, the Iran, essentially, and US and Israel situation will have possible effects on the crypto space. And they're having talks right now, which is just stupid to begin with. It makes zero sense. But then Trump is a very unpredictable man. So we don't know what his next move is going to be. If he has his entire US army outside on the Persian Gulf, I'm expecting something to happen. I'm expecting the US to do something about this. Let's see how it goes. Now, Wall Street is what we're going to talk about next on tonight's live. But before we talk about Wall Street, let's go inside the comment section first. Let's see what's happening there. And then essentially we'll go through the next news. So as I said previously, this is live. If you do have any questions, go for it inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section. We were here, I think. Hi, Miles and family. Alex, good to see you. How you doing? Comatose, good to see you. How you doing? Miles, will new Trump coin SKMR to be released on 23rd of February have any impact on the markets? No. I personally wouldn't touch it with 10-foot pole. When it comes to celebrity coins, political coins, athlete coins, I wouldn't touch them with a 10-foot pole. The only projects that I would say for people to look into, never buy, but look into, is projects that have any sort of PDFs attached to them. In other words, contracts, licensings, projects that will do good in a regulatory environment. Those are the ones that matter. Crypto projects that are linked to celebrities, politicians, or athletes are a big red flag. Don't go anywhere near them. So in regarding that project being released, the new SKMR coin, a Trump coin that's going to be released, I wouldn't touch it with a 10-foot pole. In general, celebrity coins, political coins, or athlete coins, never touch them. And it wouldn't have any sort of impact on the markets either. Hi, Miles and CMF and Peg. Good to see you. How you doing? How you been? I love longing in the market. Let's go. Let's go, Peg. We have too much firepower and military power in the region to be waiting. Honestly, facts. Let's go Scots for saying that. Absolutely facts. Hello, Miles and CMF. Let's go, Miles. Let's go, Scott. How you doing, brother? Share the live. Let's go, Scott. Miles, XRP, we are about to do something special. Do you agree? I agree, 100%. Hi, Miles and CMF. Stormy, good to see you. How you doing? That is one of the sticking points with the Clarity Act, the Trump coin, and the Trump family making a lot of money from it. It's true. Democratic politicians are hinged on the idea that Trump's family is making too much money from crypto, and therefore, if we want a Clarity Act passed, Trump's family needs to, stopped conducting business inside the crypto space. And then the Democrats essentially said, we will vote in favor of a Clarity Act. I'll be honest, I don't believe a single word that comes out of any politician's mouth. I struggle to believe any word that comes out of a politician's mouth because politicians are full of shit. They're completely full of it. So the reason why I don't believe it is because the Democratic Party under Biden's administration was against the crypto space. There was no Trump. There was no Trump's family making money from crypto, but they still voted everything against the crypto space. And now we have a Trump presidency and essentially Democratic Party saying, oh, Trump's family is making money from crypto. That's why we don't want to vote for a Clarity Act. I don't believe any word that comes out of any politician's mouth. Under Biden's administration, there was no Trump coin. There was no Trump family, essentially crypto space. There was nothing to do of any links between Trump and the crypto space. And still, the Democratic Party voted against the crypto space. For the idea that they're using this essentially as a talking point that, because of Trump, we're going to vote against the Clarity Act because Trump is making too much money from crypto is an absolute load of BS. Because Trump's family wasn't making money in the past from crypto space, but the Democratic Party still voted against it. The Democratic Party is being paid off by someone or some entity. Now, Wall Street is what we're going to talk about next on tonight's live. Do you think, Miles, it's a go move to add Monero in our portfolios? Hell no. Privacy coins are not good whatsoever in the real world. A long time ago, about 2-3 years ago, I said to everybody that somewhere down the line, privacy coins will get delisted. I think it was 3 years ago, I told everyone. 3 years ago on TikTok lives that I used to do, I told everyone that privacy coins are a big no because, and I did say that it's not because you're not going to make money from them, because you will make money from Monero and Zcash and so on. But I said it's a big no because I said we're going to be moving in a very regulatory environment somewhere down the line. I said this 3 years ago on TikTok lives. I said because we're going to move into a very regulatory environment somewhere down the line, that privacy coins will get delisted in essentially countries. And 2 years later, essentially 2 years later, I said the same thing again. And one by one, exchanges started delisting privacy coins about a year ago. It's continuing to this year as well, where the UAE is now delisting Monero and so on, privacy coins. It's because governments want control inside of a digital world, and they can't have control when there's Monero and Zcash and so on and so on when it comes to privacy projects. And if you're somebody that's going to be holding privacy tokens somewhere down the line, again, they will raise in value. However, it will be difficult for you to most likely spend it, is what I would say. So you can buy it, you can hold it, but it'll be difficult for you to get rid of it. The only way you're going to get rid of it is on the DeFi space because it's difficult to regulate that space. Or on the other side of the market space, the other 95% of the internet, regular people don't get to see. Which, why would you want to hold a coin that can only be used on the 95% of the internet that regular people don't get to see? You're better off going for projects that are essentially regulated, like XRP, XLM, XDC, HBOS, Solana, AVAX, ARB, and so on. You're better off going for those types of projects in the long run. And again, it's not because privacy coins won't do well; they will. This world that we live in operates on good money and bad money. And going into a digital world, good money and bad money will still exist, and bad money needs to go somewhere. Now, Wall Street weighs in on strategy, in other words, after the record quarter four losses. So, as we all know, MicroStrategy took an absolute battering yesterday. I think it was roughly about $6.2 billion they lost. Wall Street analysts are closely scrutinizing strategy right now. 12 points, essentially the company reported a staggering $12.6 billion net loss for the fourth quarter of 2025. This massive deficit was almost entirely driven by market to market, essentially accounting on his vast Bitcoin holdings. As digital assets prices plunged towards essentially the end of the year, despite the eye essentially popping paper loss, many analysts remain focused on the company's structural resilience, noting that a significant $5 billion income tax benefit helped cushion the blow that the firm's essentially core software business remains a stable, a bit small revenue generator. Investor sentiments on the stock has become increasingly polarized, with essentially critics pointing to a crisis of conviction, as shared essentially as shares traded at a significant discount to their underlying Bitcoin value for much of the quarter. However, some institutional essentially analysts, including those from Cato, Figscott, and essentially TD Cohen, have maintained that their buy ratings, arguing that the company's aggressive accumulation of 713,000 Bitcoin positions, it has essentially the ultimate leverage play of the crypto recovery. These analysts emphasize that while the quarterly volatility is unsettling, the company's establishment of a $2.25 billion cash reserve and its ability to raise capital through innovative digital credit products provide a necessary buffer against further market downtrends. Wall Street believes that strategy is going to survive moving forward, even after this massive crash situation we had. Looking ahead to 2026, the consensus among Wall Street observers is that strategy's fate remains essentially tied to Bitcoin's price trajectory and upcoming index decisions. A potential removal from the MSCI index looms as a significant essential risk that could trigger billions in forced liquidation, according to JP Morgan analysts, which is true. So, Q4 2025, we talked about how JP Morgan is in some sort of a way pressuring strategy to essentially sell some of its Bitcoin. They don't like the idea that MicroStrategy has such a big play on the crypto space, and that there is essentially some sort of a pressure coming from JP Morgan to make strategy sell its position. Not all of it, but quite a bit of it, you could pretty much say. If JP Morgan is capable of pressuring strategy, not directly, indirectly, if they're capable of pressuring it, that will again cause the markets to drop. A strategy is going to be piling on the market space, to be fairly honest. I'm hoping before that even happens, we have a Clarity Act in place so that the rest of the crypto space can decouple from Bitcoin's footsteps. And if essentially strategy wants to dump on the market space because they have no choice legally, it doesn't affect the rest of us. Honestly, I'm tired of Bitcoin. I think I speak for everybody inside the crypto space. I think when I say we are all collectively inside the crypto space tired of Bitcoin's footsteps, and that we want to essentially move away from Bitcoin. When it comes to essentially XRP, XLM, XDC, HBAR, AVAX, Solana, Ethereum, ARB, the list goes on. We all just want to move away from Bitcoin and decouple. Collectively, I think the crypto space is tired of following Bitcoin's footsteps. We just are counting the days for utility to happen. We are counting the days for the Clarity Act to happen so we can move away from Bitcoin. Because then whatever happens to Bitcoin, we couldn't care less because we've moved into utility, which is, as I said many times, main purpose of cryptocurrencies is utility, not following Bitcoin's footsteps up and down. Now, also, regarding essentially what's happening inside the market spaces and Wall Street and so on, we also have some prospective news to go through of what's going to be happening in 2026. Before we talk about that, and it's quite positive news, let's go inside the comment section first. This was happening there, and then we'll go straight into the Bitcoin. Essentially, we go straight into the what's going to be happening in 2026. Positive news. So let's see where we're at inside the comment section. We were here. I agree with you, Miles. These politicians are full of facts. So what if Trump's family is making money? All those career politicians and their insider trading, the nerve. I can't stand Dems in Congress. I agree. I agree, Stormy. Facts. Miles, I remember you saying that. I started to move away from the privacy coins after that program too. Let's go, Scott. Good evening, Miles and CMF. Mike, good to see you. How you doing, brother? XRP, XDC, XLM, and HBAR. Let's go, Scott. Let's go, Mike. Let's go, Miles. Let's go, Scott. Share the live. Let's go, Scott. Man, XRP was down as low as $1.16 yesterday. Boy, I did some dollar cost averaging. Let's go, Scott. Thanks, Miles, for your valuable answer and for the valuable knowledge you are sharing with us. It is profitable for all of us. Be blessed for us. Scott, thanks so much. Carlos, thank you so much for the kind words. There was a massive move in the XRP arena yesterday too, just my personal belief, but I think something is going to happen. I agree, Scott. Sorry about my grammatical errors. A new problem, Scott. Yes, sick and tired of BTC and Michael Saylor. Miles and news on XLM. No news so far on XLM, I'll be honest, but it's still good to go. Guys, I think XMXDC is a sleeper. I agree, Scott. Now, the normalization of digital asset treasuries 2026 essential business trends. So here's a glimpse of what's going to be happening in 2026. The corporate world is entering a new era where holding digital assets on balance sheets is no longer viewed as a fringe experiment, but a standard component of modern treasury management. It's exactly essentially what Monica Long said from Ripple CEO essentially regarding 2026 of what's going to be happening, where 500, essentially the Fortune 500 companies are all going to be inside the crypto space. Banks are going to be holding crypto essentially on their balance sheets. Institutions will be holding crypto on their balance sheets, and that this is the institutional era. Hence why we had this massive 72 hours of market shakedowns that were happening. Because they talked about in quarter four 2025 as well. We're going away from retail money into institutional money, and then this happens in quarter one. But anyways, we're past it. The 72 hours are done. The market shakedown pretty much looks like it's over. So, the corporate world is entering a new era of where holding digital assets on a balance sheet is no longer viewed as a fringe experiment, but as a standard component of modern treasury management. This shift, essentially termed the normalization of digital asset treasuries, is being driven by a combination of more mature regulatory, essentially, environments and institutionalization of crypto financial services. As businesses essentially seek to protect their purchasing power against traditional currency fluctuations, many are increasingly looking to assets like essentially cryptocurrencies and stablecoins as a viable alternative to cash equivalents, signaling a more towards more diversified and resilient crypto reserves. A key factor propelling this trend is the rapid development of institutional grade infrastructure that simplifies the acquisition, custody, and reporting of digital assets. In 2026, the arrival of standardized accounting rules and the real time auditing tools has removed the significant administrative, essentially, hurdles that previously deteriorated chief financial officers, CFOs in other words, from entering the space. By integrating these assets into their existing financial frameworks, companies can now manage liquidity with greater speed and flexibility, utilizing programmable money to automate cross border payments and treasury operations that were once bogged down by legacy banking delays. That's also giving us another hint that this is the year of cross border payments. This is the year of institutions, this is the year of regulations, and this is the year of utility and cross border payments. And we all know who the king of cross border payments is. Ultimately, the normalization of digital treasuries represents a fundamental change in how corporations perceive value and risk in digital first economies. As more industry leaders adopt these practices, the network essentially effect is likely to accelerate, making digital asset integration a competitive necessity rather than a choice. The trend not only provides a massive new sources essentially of capital for the crypto markets, but also solidifies the role of blockchain technology as a backbone of the next generation of global commerce, where digital and fiat assets coexist seamlessly on balance sheets from the world's largest enterprises. That came from Coindesk today. That 2026 moving forward, it's still all about institutions. It's about cross border payments. It's about regulations. And it's about every corporation you could pretty much think of is going to be involved in cross border payments, is going to be involved in holding some sort of crypto assets in their treasuries this year. All because this is the year of regulations. You can now essentially see why we had a shakedown in quarter one of 2026 before moving into regulations and institutions and cross-border payments and treasuries. You can now picture why we had a shakedown in quarter one, because moving away from retail money to high net worth clients. Now, Ondo Finance is what we're going to talk about now. What we're going to talk about next on tonight's live show. But before we talk about Ondo Finance, okay, Ondo Finance. aims to build an on-chain prime brokerage starting with preps. So, Ondo Finance has unveiled a strict roadmap to reconstruct a traditional prime brokerage services within decentralized finance ecosystem, identifying essentially features as perhaps essentially as the critical first step. Ondo Finance is taking a page out of Ripple's playbook when Ripple essentially purchased Hidden Road for over $1 billion and then decided to name it Ripple Prime, in other words, to start their own brokerage essentially firm. Ondo Finance is thinking about doing the exact same thing, following Ripple's playbook. In an interview with Coindesk, Ondo president essentially highlighted that the firm's long-term goal is to create a unified on-chain environment where institutional and retail investors can trade, lend, and borrow across multiple asset classes seamlessly. By launching Ondo Preps, the company is building the foundational liquidity and risk management infrastructure necessary to support more complex financial operations that have historically been confined to centralized Wall Street institutions. But it's okay because Ondo Finance and Ripple are in bed together, which is brilliant. The newly launched Ondo Preps platform allows global users outside the United States to trade futures contracts on major US stocks, ETFs, and commodities with up to 20x leverage. A standout feature of this initiative is the ability to use tokenized securities such as tokenized BlackRock Treasury ETFs or Apple shares as collateral rather than relying solely on stablecoins. This approach significantly enhances capital efficiency, allowing investors to maintain exposure to yield bearing or blue chip assets while simultaneously executing leverage trades on the same platform, effectively bridging the gap between spot and derivative markets. As a part of its 2026 expansion, Ondo is positioning itself as a central hub for the convergence of traditional and digital finance. Beyond futures, the firm is also scaling its global markets platform, which already holds a dominant market share in tokenized equities and treasuries. By partnering with major players like MetaMask and Ripple and exploring integrations with traditional giants like MasterCard, JP Morgan, and essentially Ondo aims to make on-chain prime brokerage a reality. This shift towards institutional grade 24/7 financial rails suggests that the next phase of DeFi will focus on recreating the full suite of investment banking services essentially for a global blockchain native audience. It's quite a big announcement from Ondo, massive announcement from Ondo, to be fairly honest, that they're going to be doing this. Basically following Ripple's blueprint that they essentially left behind. Now, on the topic of essentially the United States market spaces, the US job losses is what we're going to talk about next on tonight's live. But before we talk about that, let's go to the comment section first. Let's see what's happening there and straight into the next news. And the next news I'm going to be sharing with you is again positive news. Quite a bit of positive news to go from tonight's live. So let's see where we're at in the comment section. As I said previously, this is live, which means if you do have any questions, go for it. Don't be shy. Miles, news on next level. Okay, we're here. Guys, I think XRP to sleep. Cross-border payments, King, XRP. Facts. Share the live, tap the bottom. Let's go, Scott. XRP or bust? XRP. When it comes to finance, I mean, it's the king. When it comes to cross-border payments, XRP is the king. XRP had a very good day this Friday. XRP made more than 25% today. HBAR did well too. These figures confirm how good in your comments analysis are. You are right, Miles. Bravo. Thank you so much, Carl, for the kind words. And I did say, a lot of people were upset yesterday watching this live show why XRP is dropping the worst. I think it was Funky as well. Funky, I think it was you that asked the question of, why is XRP dropping the worst? And I said to you, Funky, and to everybody else that was watching live yesterday, I said if XRP essentially is dropping the worst today, it's going to be the one that violently rises straight after. And today we saw XRP violently rising compared to the rest of the crypto space. Bitcoin was doing 9% up, while XRP was doing 25% up. Even the news was shocked on why XRP has some sort of a rocket attached to it. Miles, I am an OG as I recollect many of those things you shared, not as advice, but as just entertainment coming to pass. Let's go, Scott. Now, US job losses hit a 17-year high, raising positive signals for Bitcoin bulls. US planned layoffs surged to 108,435 in January, marking essentially the highest level for the month since 2009 global crisis. This 205% increase is announced in job cuts suggests a sharp cooling of the labor markets that essentially contradicts more resilient official payroll data. Market experts point out that these figures, which are largely set at the end of 2025, reflect a growing lack of optimism among employers regarding the economic outlooks for 2026. The spike is essentially in unemployment signals is being viewed by some analysts as a potential catalyst for a shift and essentially remains above targets. And private indicators, including blockchain-based gauges, suggest that the disaffection is essentially occurring more rapidly than reported. This divergence could force the Fed to lower interest rates to prevent a deeper recession, a move that historically provides significant tailwinds for risk on assets like cryptocurrencies. In other words, we could be getting ready for the Fed to essentially do more rate cuts. Is Jerome Powell going to be doing a rate cut before he's kicked out the door? I hope he does the right thing, or he can be another Gary Gensler and does the wrong thing all the way until he's shoved out the door. Either way, the data that came out is playing positive for the crypto space so far regarding job reports. Now, XRP is what we're going to talk about next on tonight's live, and more specifically, essentially regarding XRP being the one that has some sort of a rocket attached to its back. So here it is. XRP rockets, essentially 18% is when this article was announced from CoinDesk, but in reality, right now, if I'm not mistaken, XRP is sitting at 25%, while the rest of crypto space is doing 7 to 8 to 9%. So as it leads, essentially, XRP rockets as it leads a wild recovery across the crypto markets. XRP has emerged as the clear leader in the market's broader essentially recovery efforts, surging 18% or now 25% in a single day to outperform every other major cryptocurrency. This was released by CoinDesk. This massive price jump essentially follows a week of intense volatility that saw a wider market struggle to find a bottom. While Bitcoin and Ethereum recorded modest gains, XRP aggressive rally caught many traders by surprise, as the token successfully reclaimed key support levels and erased much of its losses sustained during the flash crash on Thursday. The surge appears to be driven by a perfect storm of positive catalysts, including the recent expansion of institutional DeFi access, which we're going to talk about on tonight's live, or essentially via Hex Trust, and the growing optimism surrounding Ripple's 2026 production era roadmap. As I explained yesterday, it's not over. We're just getting started. Analysts noted that the move was intensified by a massive wave of short liquidations as traders betting against the asset, XRP, were forced to buy back their positions. This technical short squeeze, combined with the sudden influx of retail and institutional volume, propelled XRP past several resistance points in one of the most violent upside moves in recent memory. Market observers are now watching to see if XRP can sustain this momentum as it approaches the psychological, essentially significant $1 mark, which it already has and essentially passed. While the broader geopolitical climate remains tense, the strength of XRP's bounce back essentially suggests a high level of underlying, essentially, conviction with long-term holders and whales. If the current trend continues, XRP could serve as a bellwether for the rest of the altcoin market, providing is essentially proving that despite macroeconomic pressures, specific assets with strong utility and institutional backing are capable of decoupling from the broader market gloom. This is from essentially CoinDesk, saying the words that XRP is showing signs. XRP is showing signs of decoupling from the rest of the market space. And that this shows that crypto projects with real utility, with real institutions behind it, are doing the best. That's what XRP is proving right now, compared to the rest of the market. Let's not forget what essentially CNBC Squashbox said when they essentially mentioned, this is not Bitcoin's year. This is not Ethereum's year. This is XRP's year. Let's not forget those words. Now, why is this good for the future of XRP? Market leadership. Leading a market-wide recovery establishes XRP as a primary momentum asset, attracting attention of algorithmic traders and institutional desks that favor high relative strength tokens. Resilience during volatility. The ability to stage an 18% plus recovery, now 25% plus recovery, immediately after a crash demonstrates a strong flaw of essentially buyers, suggesting that investors view essentially XRP, a sub $1 price range, as a high value entry point. Liquidating the bears. The wild move significantly punished the short sellers, potentially clearing the way for more stable uptrend by reducing the incentives for traders to bet against the asset in the near term. They're essentially saying that XRP looks like it's the leader right now. This is XRP's year, to be fairly honest, according to CNBC Squash Books. This is the year of cross-border payments. This is the year of institutions. This is the year of regulations, and this is the year of utility. Also, on Ripple and XRP. Ripple lays out institutional DeFi blueprint for XRP Ledger with XRP at the center. Before we talk about that, let's go inside the comment section first. As I previously did, this is live, which means if you do have any questions, go for inside the comment section. Let's see where we're at inside the comment section. Okay, we were here, I think. Yep, we were here. Scott says, Miles, your group is outstanding. My grandfather used to tell me as a youth, you get what you pay for. When it is free, take it because you get more. Miles, you're free and we get more. Thank you. Scott, thank you so much for the kind words. And I am free. I've been free for the past 3 years. I've never charged a single penny for any information that I give. Guys, share the live, this hidden gem that we have inside the crypto space. Thank you so much, Scott, for the kind words. Honestly, CMF members, I honestly do appreciate it a lot when you share the lives, when you retweet the essentially live on X, when you like the live on X. It shows me that what I'm putting out there is being received, and I appreciate a lot when everybody essentially likes and retweets. And if you haven't liked or retweet essentially the live show, CMF members, like and retweet. And this is Friday's essentially live show, which means the next live show is going to be on Monday. So like and retweet if you haven't already. If you have, thank you so much to every single one of you. XRP is the king. The CMF family sees it. Let's go, Scott. And same goes if you watch on YouTube as well. XRP is saying BTC who? Pretty much. Miles, if someone has to invest 10K, but he is essentially hesitant between buying silver coins and XRP, can you please share your opinion on this? Carl, good question. If someone has $10,000, pounds or euros, and they're thinking between buying silver or buying XRP, it just has to be on the basis of how you're seeing it. Silver has a essentially ceiling it's going to be touching, and at one point it's going to come back down again. And I'm not saying XRP is going to not touch some sort of a ceiling, come back down, because the markets are volatile. But regulations does help to make it more stable, which we don't have yet, which we will be getting very soon. In the long run, XRP is a better play. In the long run, XRP is life-changing. In the long run, silver is not life-changing. Silver is profitable. In the long run, silver is very profitable, no doubt about it. But in the long run, XRP is life-changing for you and generations to come. So if I had 10,000 pounds, euros, or dollars, and I was given the option to buy 10,000 worth of silver right now or 10,000 worth of XRP right now, I'm taking the XRP. Silver will be very profitable long run, but XRP will be generations to come will be feeding off that XRP because you made that decision to buy XRP rather than silver. Miles, I think it's about time that the XRP army should be rewarded now. Let's go, Funky. I agree. I'm so glad that I brought more XRP and quoted at $1.17 and now $1.20. Let's go, CMF. Let's go, Stormy. We have all waited for so many years, holding XRP so tight like our baby. Diamond hands. Facts. We have. I must leave, Miles. Thanks for the great news. And you and the CMF have a great weekend. See you on Monday. Free and forever. See you on Monday, same time as usual as well. Now, Ripple. Ripple lays out an institutional DeFi blueprint for the XRP ledger with XRP at the center. Ripple has unveiled a comprehensive streak roadmap that positions the XRP ledger as the primary blockchain for institutional grade decentralized finance. According to a report from CoinDesk, the blueprint focuses on transforming the ledger from a simple payment rail into a compliance first financial ecosystem where XRP serves as the core settlement and bridge asset. By embedding identity and control parameters directly into the protocol layer, Ripple aims to solve the regulatory security hurdles that have historically prevented large-scale traditional institutions from emerging on-chain liquidity. The roadmap highlights the several key technical pillars, including the multi-token, essentially MPT standard, and the highly anticipated essentially XLS66 lending protocol, which we talked about for a bit, essentially a few days ago, when it was just being mentioned on X. But now this is coming from Ripple themselves and CoinDesk, which is designed to enable pooled and underwritten credit directly on the ledger. Unlike existing DeFi platforms that rely on third-party smart contracts for compliance, the XRP Ledger's approach utilizes permission domains and credential-backed access to ensure that all participants are verified before interacting with specific markets. Essentially, this architecture allows banks and asset managers to issue tokenized real-world assets such as bonds and private funds, while maintaining a strict adherence to global AML and KYC standards, which is what banks want. The idea of banks going digital or governments letting banks essentially go digital is that they want the crypto space to represent the banking sector in some sort of a way. Yes, they love the idea of fast payments and secure payments and so on, but they also want it to represent the banking sector, which XRP is the only one. Honestly, the XRP ledger is the only one that is even close enough to represent the banking sector, or I would have to say it's on the money right now. To further bridge the gap between traditional finance and digital asset space, Ripple is integrating these features with its Ripple Treasury and Ripple Prime platforms. This integration allows corporate treasuries and institutional trading desks to manage fiat to crypto flows, access DeFi liquidity venues like Hyperliquid, and hold tokenized assets within a single regulated risk management framework. By centering XRP in this blueprint, Ripple is signaling a shift towards a production era, where the asset's value is increasingly anchored into its utility as the primary liquidity vehicle for a new generation of institutional grade financial products. Why is this good for the future of XRP? Structural demand shift. By moving XRP to the center of institutional DeFi ecosystem, the asset transitions from a speculative token to a critical utility for on-chain credit and settlement, creating sustained, non-speculative demand from global financial firms. In other words, XRP goes from, is it going to be used, to hell yes, it's going to be used. Simplest way to put it. Compliance as competitive edge. The protocol level integration of identity and regulatory tools makes the XRP ledger more attractive to conservative capital than the Wild West. XRP ledger is trying to shift away from completely the rest of the crypto space. The crypto space is known as the Wild West. Why? Because we don't have regulations. But in general, the XRP ledger is just trying to not just decouple from Bitcoin and the rest of the crypto space when it comes to finance. They're trying to decouple and move away completely from the attachment of Wild West to we are different. Compliance and competitive edge, the protocol integration level of identity and regulatory tools makes the XRP ledger more attractive for conservative capital rather than the Wild West DeFi chains, potentially drawing billions in institutional liquidity that were previously sidelined. Ecosystem synergy, the combination of native lending, tokenized real-world assets, and the new EVM sidechain creates a powerful network effect. As more institutional products are launched on the XRP ledger, the velocity and volume of XRP transactions are expected to grow, solidifying its role as a cornerstone of the future of financial stack. That's why when XRP touched $1, it went shooting up 25%, while Bitcoin, Ethereum, AVAX, Solana, the list goes on, they were up 9%, 8%, 7%, 10%, 12% when it came to recovery, and XRP was doing 25% up. Seems like it is going to be XRP's year by the looks of it. It is going to be the year of regulations. It is going to be the year of institutions. And it is going to be the year of cross-border payments. And once again, the XRP haters inside the crypto space who keep on saying, nobody's going to use XRP. Nobody sees a future in XRP. Ripple's been using people. Seems like they were wrong again. Just a quick question. Has the XRP haters ever been right? The answer to that question is no. On that note, we have reached the endings of tonight's live. This was the CMF live show. It stands for Crypto Mouse Family. My name is Mouse. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And as it is Friday, the next essentially live show episode is going to be on Monday. Episode 437 is going to be on Monday. Like, comment, retweet, follow, subscribe if you already haven't. If you have, thank you so much to every single one of you who has liked and retweeted and put a comment outside the live on X and or essentially on YouTube, depending on where you're watching from. Before we do go, let's go start the comment section first. This was happening there, and then we will call it a night. So let's see what's happening inside the comment section before we do go. I saw low my XRP at the bottom to buy at the top. It's go carry. Guys, dollar cost averaging has helped me tremendously. Facts. It does help a lot. I am all in on XRP, XLM, XDC, and HBAR. I read on these cryptos daily. Let's go, Scott. I personally see XRP and XLM, XDC doing something special soon. This is just me thinking out loud, not advice. Let's go, Scott. Thank you, Miles. Peg, let's go. See you tomorrow, same time as usual. See you on Monday, same time as usual. Good night, Miles, and good night, CMF. See you all on Monday night. Let's go, Funky. See you on Monday, same timing as usual. Good night, Miles, and good night, CMF. See you on Monday. Let's go, Funky. See you tomorrow. See you on Monday, same time as usual. Miles, congratulations on program 436 in the US, Kentucky. Let's go, Scott. See you on Monday, same time as usual, Scott. Have a great night, Miles, and see you on Monday. Let's go, Autistic. See you on Monday, same timing as usual. Thank you so much, Miles. Have a great weekend, everyone. Let's go, Stormy. Have a great weekend as well. See you on Monday, same time as usual. Thanks, Miles, for your time. Much appreciated. Have a great weekend, CMF. Let's go, Shelly. See you on Monday, same time as usual as well. Thanks for all you do for our group. Let's go, Scott. Thank you so much. I appreciate integrity too. Let's go, Scott. Share the live. Let's go, Scott. Thank you very much. Sir, have a great weekend. Carlos, let's go. See you on Monday, same time as usual. Love and respect, my brother. Let's go, Scott. See you on Monday, same time as usual. CMF, chin up, guys. Let's go, Funky. See you on Monday, same time as usual as well. I will see everybody on Monday, same timing as usual, 10 p.m. Long time onwards. Like, comment, share, retweet, subscribe if you already haven't. If you have, thank you so much to every single one of you. I will see you on Monday. All of you, love you all. Have a great weekend. See you on Monday, same time as usual. Scott, see you on Monday, same time as usual as well.